Dutch merchants sought to break into the lucrative spice trade controlled by the Portuguese. For this purpose, the Dutch East India Company, or VOC, was founded in 1602. Statistically, the VOC eclipsed all its competitors in the Asian trade. Between 1602 and 1796, the VOC sent nearly 1 million Europeans to work the Asian trade on 4,785 ships and earned more than 2.5 million tons of Asian goods through its efforts. In contrast, the rest of Europe sent only 880,000 people, and the English East India Company, the VOC's closest competitor, was second behind its total traffic with 2,690 ships and only 1/5 of the tonnage of goods. In order to raise more capital, the company began selling stock. VOC became the first publicly traded company in the world. The company hired a private army and navy to seize Asian trade from other Europeans as well as local tribes. In 1619, the Dutch captured part of the island of Java and founded the city of Batavia, followed by active territorial expansion. The seizure of Ceylon and the Moluccas Islands from Portugal undermined its trading empire. The nearly century-long monopoly of the Portuguese was lost. The spice trade from Asia to Europe was led by the Dutch. Unlike the Portuguese, the Dutch established their own colonies where spices, primarily cinnamon, pepper, cloves, or nutmeg, were grown with the help of locals or slaves. The main business was in Asia. The Dutch sold their spices and goods from Europe to India in return for Indian fabrics, which were highly prized. The fabrics were sold in the islands of Indonesia and Japan in exchange for precious metals. Metals, mostly silver, were used for Chinese trade in exchange for silk, porcelain, and tea, which, along with spices, were loaded onto ships to Europe. In its best years, the number of VOC employees in Asia alone could be up to 30,000 people. Sailors, soldiers, merchants, and officials. The company's net worth at the height of its power reached the equivalent of 8 trillion modern dollars. But what allowed the small United Provinces to achieve such power, first in Europe and then in Asia? What was the secret of success? We know that the money at that time was silver and gold coins, which were always insufficient for even a small medieval trade in Europe. But how then could the huge flows of goods to and from the port of Amsterdam be serviced? Where did the merchants get so much silver to buy and sell? The answer is brief: credit. Credit has always been the lubricant that allows the economic machine to run much faster. Fernand Braudel. The Amsterdam Stock Exchange, founded in 1602, stood directly opposite the East India Company and the Bank of Amsterdam, where hundreds of merchants and traders gathered in the square to transact business. Let's assume that Merchant Mario wants to buy a sack of peppers from Merchant Moritz, whose peppers will be delivered to Amsterdam on a VOC ship in a month. Mario gives a promissory note to Moritz, where it is written that he is obliged to pay a certain amount of money by a certain date. Moritz, in turn, records the ownership of the bag of peppers in favor of Mario and gives him the document. These documents are called commercial papers, but Mario hears that a war is about to break out and decides that the price of metal will rise. So he goes to the Amsterdam stock and exchanges his bill of exchange, which states his ownership of the pepper, for a bill of exchange with iron. Moritz saw that the price of tobacco was skyrocketing. From Mario for tobacco stock. Thus, the merchants had already made 3 financial transactions without using a single coin, while the pepper ship still hadn't reached Amsterdam. Hundreds of merchants made tens of thousands of transactions every day, often for goods they didn't have: spices that had not yet arrived from Asia, grain that had not yet been harvested from the fields of Poland, iron that had not yet been extracted from the mines of Sweden. Everything was sold and bought. Sometimes speculation led to what we today call a financial bubble. The most famous example is the tulip fever, when one tulip bulb was worth 2 horses and a carriage. The bubble, of course, burst, and many people lost money. If money was needed here and now to buy a batch of goods or to charter ships, practically everyone could get a loan from the bank in Amsterdam, which stood opposite the stock exchange. The Dutch merchant always had fast money, and unlike foreigners, the Dutch could buy goods at the right time and in the right quantity and equip ships in time when there was no silver. Specialists say that the ratio of paper money to silver and gold coins in the economy was about 10-to-1. Virtual money and available credit became the main weapon the Netherlands used to build their empire. Catherine the Great and the Elector of Saxony borrowed money from the Bank of Amsterdam, pledging ships with precious metals and brilliants, and bonds of the governments of England, France, or the independent states of America were sold on the Amsterdam Stock Exchange. In time, London would learn from Amsterdam and take the palm of superiority, but that is another story.